Have you ever stopped to think about how fast the tech world changes? I mean, really changes. It feels like the ground is constantly shifting.
It really does.
Yeah,
One day, a company is known for one thing, the next, they're completely reinventing themselves.
exactly. It's less like a predictable game and more like, well, a landscape constantly reshaping itself.
Welcome to the Deep Dive. We're here to help you get informed fast. Today, we're taking a close look at Qualcomm, QCOM. Now, you probably know the name from your phone chip, right?
Yeah, most people do.
But this isn't just about that. We're talking about a huge strategic shift, a transformation that's really changing what Qualcomm is. We've pulled together a lot for this fundamental analysis, technical charts, financial reports, sector overviews, all pretty current as of July 2025.
Yeah, quite a stack of material.
And our mission today is to boil all that down. We want to show you how Qualcomm is trying to reshape itself, what that means for smart devices, maybe even for global tech power.
It's significant. We're going beyond just what they're doing to why it matters to you as someone using tech and just watching how this world evolves.
Yeah.
So let's zoom out. What's the big story here? What's the headline for Qualcomm's transformation?
Well, the clearest thing from the sources is this active shift. They're moving from being mostly about mobile chips to becoming a leader in what they're calling the intelligent edge.
The intelligent edge, okay.
Yeah, and this isn't just about spreading risk, though that's part of it. It's really about changing their core identity, moving from being, a hardware seller whose fortunes go up and down.
Right, cyclical.
Exactly, to being more about intellectual property, the IP, and the platforms for this next wave of computing everywhere.
Computing everywhere, like outside the big data centers.
Precisely. Think about putting more brain power directly into the devices themselves. Your thermostat, your car, factory machines, smart city stuff, processing data right there, locally, not always sending it off to the cloud.
Ah, okay. That distinction, hardware vendor versus IP and platform provider, seems key. And their CEO, Cristiano Amon, he's really pushing this. He's set this, well, incredibly ambitious goal, something like a 50-50 revenue split between phones and everything else.
The target, yeah, by the end of the decade.
Wow. Okay, let's unpack this. That's a massive shift for a company so tied to smartphones.
It's huge. And to make it happen, they're basically built on two main parts. First, you've got QCT, Qualcomm, CDMA technologies.
EBT, right.
That's the hardware side. The chips, the software for phones, cars, IoT, Internet of Things, and these other intelligent edge devices. That includes Snapdragon, their modems, RF front end.
And that RF front end, just quickly, that's the bit handling the actual signals, right? Sending and receiving. Crucial for 5G.
Absolutely vital. Make sure your phone talks to the network efficiently across all the different bands. Then the second pillar is QTL, Qualcomm Technology Licensing.
QTL, the licensing arm.
Exactly. That's where they license out their huge portfolio of patents, especially 3G, 4G, and now, critically, 5G. This dual structure gives them, well, a unique kind of financial strength.
And that financial strength, it's not just numbers on a page, it's what's actually fueling this big pivot.
Absolutely.
Looking at their recent numbers, Q2 fiscal 2025, ending late March, they pulled in nearly $11 billion in GAAP revenue, $10.979 billion. That's up 17% year over year.
Strong growth.
And non-GAAP EPS, $2.85, also up 17%. And that non-GAAP figure, it sort of strips out some accounting noise, gives a clearer view of the core business profit, right?
That's the idea, yes. It reinforces that the underlying business, the pivot, it's working financially.
And you really see that diversification success when you break down the QCT segment revenue. Handsets are still the biggest piece, sure, $6.9 billion, up 12% year over year, which is still healthy.
Still very significant. But look at the other areas.
Here's where it gets really interesting for the diversification story. Automotive surged to $959 million. That's up 59% year over year.
59%, yeah.
And IoT, $1.58 billion, up 27%. What's behind that? Why such strong traction there?
Well, those growth percentages, they're just a clear signal that the investments they've made are really starting to hit. They're grabbing serious market share in these newer areas. And the secret sauce, as you called it earlier, is still QTL, the licensing business.
Ah, yes.
It brought in $1.3 billion, roughly, in Q2. And the thing about QTL is its margins. High margins, consistent cash flow, almost like an annuity.
Annuity, like, okay.
Yeah, their EBT margins, earnings before taxes, consistently hover between 70 and 75%.
70 to 75%, that's incredible.
It really is. And strategically, what's fascinating here is how the QTL segment acts as this stable, high-profit engine. It sort of de-risks the hardware side, which needs more capital investment, and it pumps out consistent cash to fund Qualcomm's massive R&D efforts.
Right, that R&D. It's their biggest operating expense, isn't it? Something like $8.89 billion in fiscal 24.
That's the figure.
Yeah.
And it's consistently funded by those QTL royalties. That lets them keep pushing the technology forward, almost regardless of short-term dips in hardware sales.
They seem committed to shareholders, too. $2.7 billion returned just in Q2 25. Dividends, buybacks.
Yeah, and they're targeting returning 100% of free cash flow for the whole fiscal year. That shows a lot of confidence in their cash generation, their overall financial health.
So, okay, they've got the financial engine. Where's that R&D money going? Let's dive into these strategic frontiers. 5G and AI seem to be the big ones.
Definitely.
On 5G, they're still dominant in chipsets. The market itself is exploding, projected to go from, what, $22 billion this year to nearly $69 billion by 2029.
Yeah, today a TGR of over 32%. Massive growth.
And Qualcomm's Snapdragon modems, the RF stuff. The sources call them the de facto choice for the big phone makers.
Pretty much standard equipment for high-end 5G.
So what does this all mean for us? It means Qualcomm is foundational to the accelerating global 5G rollout. From your phone to connected cities, you're likely using their tech constantly.
That's a crucial point, and tied right into that is their AI strategy, specifically on-device AI.
On-device AI.
Yeah. CEO Cristiano Amon calls AI the next frontier in user interfaces, even a generation change.
A generation change.
Wow. And Qualcomm's angle is different. They're focused on embedding AI capabilities directly into the devices, mobile, PC, automotive, IoT, all of it.
Right, not just relying on the cloud for all the AI heavy lifting.
Exactly. And if we connect this to the bigger picture, this on-device AI focus creates a differentiated competitive advantage. Processing AI locally gives you huge benefits.
Like what?
Real-time responses, inference, they call it, lower latency, so less delay, better privacy because your data doesn't always have to leave the device, and it uses less bandwidth.
That makes sense. Lower latency, better privacy.
Yeah.
That's quite different from the big cloud AO players like Nvidia.
Totally different focus. Nvidia dominates the data center, the cloud side. Qualcomm wants to own the AI processing happening right there on the edge in your hand, in your car.
So this on-device AI, it could really change how we interact with tech. Make it more immediate, maybe more private, decentralize AI a bit.
That's the potential, absolutely. And we're seeing it in products already, like their Snapdragon X series chips for the new wave of AI PCs.
Ah, the AI PC push.
Yeah, driving up the average selling prices for those laptops too. And their new modem, the X85, expected around October 25, it actually uses AI itself to improve 5G performance.
Interesting. So AI is improving the connectivity, which then supports more on-device AI. A feedback loop.
Precisely. It shows how their 5G and AI strategies are intertwined.
Yeah, and this all fits into the wider semiconductor industry picture, right?
Yeah.
Projected growth is strong.
Very strong. About 9% compound annual growth expected from 2025 to 2030. The whole industry potentially hitting $1 trillion by 2030.
$1 trillion.
And a lot of that growth is being driven by demand for AI. So that's a huge tailwind for Qualcomm.
Okay, but it's not all smooth sailing. Let's talk about the competition. It sounds fierce.
Oh, it is. You've got giants in the ring. Nvidia, totally dominant in data center AI, high-performance computing.
The king of AI chips for now.
Then there's Broadcom, really strong in AI networking, infrastructure software. They bought VMware, remember? They're pulling in over $12 billion in AI revenue already.
Wow. And Intel.
Intel's fighting back, re-strategizing in PCs, trying to build out their foundry services, though they posted a net loss in FY24. But they are competing directly with Qualcomm in that AI PC market.
So with all these heavyweights, how does Qualcomm stand out?
Well, like we said, they carve out their space with that edge AI focus, their leadership in 5G modems, which is still critical, and that really unique high-margin licensing business, QTL. It's a different model.
It seems different, yeah. But analysts, while the projections for sales and earnings growth in 25 look good, like 11.8% for sales, 14.6% for EPS.
Those like numbers.
Right, but the reports say analyst EPS estimates have been trending downwards slightly. What's that about? If growth looks good, why the caution?
That's a good question. It's likely a mix of things. The market sees the growth, yes, but it's also weighing the sheer intensity of the competition we just talked about. and the huge R&D spending needed to stay ahead in things like on-device AI. It's expensive to lead. So maybe some caution about maintaining those profit margins amidst the spending and the fight.
Right. Balancing growth with investment and competition. Makes sense. And then there are the big picture macro factors, always looming.
Always. On the plus side, like we mentioned, the overall semiconductor industry is expected to have double-digit growth in 2025, driven largely by AI that helps everyone, including Qualcomm.
But the flip side,
Yeah.
geopolitics.
Yeah, that's the big uncertainty. You have this massive concentration of chip manufacturing in East Asia. TSMC in Taiwan makes over half the world's advanced chips.
54% of global foundry capacity, the number was. A lot of eggs in one basket, geographically.
It makes the supply chain very vulnerable to any tensions there, especially across the Taiwan Strait.
And then the U.S.-China tech tensions. Export controls on advanced chips going one way.
Right. The U.S. restricting sales of top-end AI processors, the 7-nanometer, 5-nanometer stuff, the really cutting-edge chips.
Versus China hitting back with restrictions on critical minerals, like gallium and germanium, needed to make chips.
Exactly. And this isn't just theoretical. The sources say these restrictions have already pushed up global chip production costs by about 8%, and semiconductor prices are up 11% since the start of 2024.
This is a really complex area, these restrictions. What does this mean for a company like Qualcomm? They operate everywhere. How do they navigate this?
It's tricky. It's definitely a double-edged sword. On one hand, U.S. controls might create these innovation bottlenecks for Chinese competitors in the most advanced chips. That could give Qualcomm a temporary leg up.
Okay, potential advantage.
Qualcomm has huge operations and a massive customer base in China, so they're caught in the middle. They need to maintain access while navigating restrictions. It's a tightrope walk.
So how do they manage that risk?
Well, they report, interestingly, no slowdown in getting new design wins from Chinese customers. So relationships seem okay for now. But supply chain diversification is obviously crucial, spreading out manufacturing, sourcing.
And maybe that licensing business, QTL, becomes even more important, since IP isn't tied to a specific factory.
That's a very insightful point. Intellectual property is more resilient to physical supply chain disruptions. So their strength in IP in QTL could be a key strategic asset in a more fragmented, geopolitically tense world.
All right, let's quickly touch on the stock's technical picture. What does the chart analysis suggest?
Well, looking long-term, the stock's been trading in this pretty well-defined upward channel since way back in the early 90s.
The long-term uptrend.
Right. And as of now, July 2025, the price around $162 is in the upper half of that channel. It's sitting below some key historical resistance levels.
Resistance, meaning previous price ceiling.
Exactly. Around $192, $193. And then the top of that long-term channel, which is up around maybe $225 to $230.
So technically speaking.
Technically, it suggests there's room for it to move higher if it can break through those resistance levels, but that likely depends on those fundamental drivers, the diversification, the AI story really continuing to deliver strongly.
Okay, so let's try and wrap this deep dive up. Qualcomm. What are the key takeaways?
I think number one is their proactive, really ambitious diversification. They are seriously trying to move beyond just being the mobile phone chip company.
Right, towards that intelligent edge.
Exactly. Number two, they still have clear tech leadership in core areas. 5G is foundational, and they're making a huge bet on this on-device AI.
A potentially differentiating bet.
Potentially, yes. And number three, underpinning all this, is that resilient high-margin licensing business, QTL. It's the financial engine.
But they're facing headwinds too.
Definitely. Intense competition from some of the biggest names in tech and these significant geopolitical pressures that add a layer of complexity and risk to everything they do globally.
So their future really hangs on executing that pivot, staying ahead technologically.
While navigating a world that's getting more complicated, competitively and politically.
It's quite the balancing act. And that brings us to a final thought, something for you to chew on. Considering Qualcomm's big push into on-device AI and this growing global focus on chip independence, national tech strategies, what do you think the next 5 years will actually look like? How will our devices process information? Will more happen locally? And how much will government policies dictate the kinds of chips that end up inside them?